We're live, ladies and gentlemen. Ooh, it's another beautiful day. I hope you are all enjoying the weather. Whether it's a rainy or sun shining down, it's a beautiful time to be alive and watching and participating in these markets. With that in mind, we're going to take a look at Bitcoin. I'm going to take a look at Litecoin and Ethereum because you guys have been asking, y'all like the top tokens. And then we're just going to give a general thesis about my feelings of the title of this video, which is Bitcoin is 6K. And I want to explain something here over and over and over again because you need to drive some of these ideas home. But with that in mind, let's just dive into the charts anyways. So if we open up, we've got Bitcoin right now on the daily chart. So what we're essentially looking at is a very long trend line which Bitcoin had shown us actually starting almost all the way back from its original breakout around $4,000 here, 4,200 I believe. So I'll show you this here on the weekly so it becomes a little clearer. Now, a lot of the times this is just all risk assessment. I'm trying to figure out where we are in the markets, not so that I can get excited or emotional. Well, aside from, again, this is just such a brilliant time to be alive, to be able to watch and partake and witness this stuff. So we have this very, very long-term trend line here, this red one, going back almost, you could stretch it almost all the way back to the beginning and keep it on par. You see the magnet breaks here. It really only fits from our original breakout point at around between 42 and 4,700. That's when we saw a lot of momentum come into the markets. So we actually broke down below this trend line. Now, the last time we broke below this trend line was at around 8,000, 9,000, and we came back all the way down to the fill the volume profile range, which is actually right near the bottom of the bear claw on the daily. So for those of you that are new to the channel, if you don't have the bear claw, you can follow us on TradingView and just click under scripts. And this is this nice stacked EMA idea here. I'll open it up on the side so you can see the bear claw is just moving averages from 0.5 to 314. And the last two are simple moving averages, which are these down here below. And for those of you that are interested, we also have the Ichimoku cloud currently open as well, because I do appreciate the way this particular indicator shows some of the market ideas. Now, the volume profile on the right-hand side has some cool features to it as well. And we'll go into more of this stuff as we go, because I'm definitely learning that a lot of you guys don't know what some of this stuff is, as myself am also new to a lot of this. I mean, only the last 6 or 7 years been in the markets to be able to understand how some of this works, make some mistakes, make some wins. Anyways, the point of this is paying attention here as we zoom in through the different time frames on Bitcoin. This trend line becomes more and more specific, right? So here on our previous uptrend from Bitcoin around $8,000, we touched it once, twice, 3 times, and then on the 4th time we broke down below it here. So we've already touched it once and then twice, and we broke below it on the 2nd time. Now we're going to come up and likely test the top of this here. So on the 4-hour and the daily, we actually get a really a clearer perspective where I think we could go in the short term and also in the long term. So for so let's keep this in mind. Again, if you follow us on TradingView and Arcane Bear, this is what we were originally looking at, and this is one of the there's a private bear den note. So this is what we were originally looking at, was the ABC breakdown potential into the bottom of the 0.618 around 10,700. And I had mentioned then as well that I thought a breakdown below 10,400 was an interesting point to pay attention to. So the breakdown here started right at the bottom of the C wave. Now, if we had bounced off the 0.618 and continued back up, that was going to be a hugely bullish indicator. The fact that we've broken down here now does not look as stable. Now, it is also could be considered a right-leaning shoulder here too. I'm not a big fan of using those chart patterns, although they can be very important. Again, the interesting part here is now that we've broken through the 786 and are headed down to the 618. So we definitely have a strong area of support and resistance at around 93 to 9400, just based off that kind of universal support range of the 618. So 9,000 is definitely plated now that we've broken this long-term resistance trend line, which is also, again, this puts us right on the outer edge of the bear claw. So one of the reasons why I use multiple indicators like this isn't because I like an overload of data, is it shows me symmetries in the data, right? Where I also have my moving average at the same point right now as the 618 on the 4-hour chart. So when I see this idea, it's not always necessarily that that we're going to see these ideas. It's just that we have to take and arrange all the variables, right? So most newbie traders only think about the long-term belief here. So just to be clear right from the get-go, I think Bitcoin is going to probably somewhere around $1 million. It could even do hundreds of millions to trillions, because we do not know what global hyperinflation looks like. Now, I don't know how much longer they can actually kick the can down the road, because we have billions of people on the planet. So maybe they can just keep printing dollars, because the confidence of that many people far extends what I originally thought we would be able to keep in a market uptick, because maybe it has nothing to do with the primary value of just printing, but more so the intellectual and physical capital that is taking place on the planet. Anyways, that is a very big philosophical conjecture that we could rant and riff on for hours alone. I am sure we won't get into it. But what's interesting, again, is that the global market space is always reacting to itself on multiple levels. So fundamentally, I think Bitcoin can go significantly higher. But as a trader, as a short-term swing like dolphin, I like paying attention to this stuff because it's super important. So I see some of you guys saying hyperwave 1K incoming. You know, what's interesting, okay, so let's go back to some conjecture on the 1 week market chart here. I'm going to delete that that long-term trend line we had, or at least intermediate term trend line. So we've actually just started to break down as soon as we got out above the cloud on the weekly, and we're testing the bottom of the cloud now. This is super important for a few reasons, because if we manage to test the bottom of the cloud and don't break down inside of it, this is a very great sign. So again, what we also end up doing is looking for that at different time frames. So for us to break into the cloud right now on the daily, we'd have to go down to $7,800. Whereas it seems more likely to me that, see this area, this band in the middle of the bear claw right now, is likely where we'll bounce into, which is around 92 to 9,300. So when you're zooming in and out of the markets, what you're doing is essentially showing yourself on multiple time frames where you're seeing this aligning energy kind of take place, right? Because now we have in the middle of the bear claw all these stacked moving exponential moving averages right here between our upper or our mid-range support and then the lower compression support. Once we break into the lower compression support, you usually have the cloud, and then the breakdown of the cloud into the EMA, and then from there you have much bigger breakdowns, right? That's where why going into the time frames is so important. So if we start to look at a little bit more of the again, I guess the muscular dissection of Bitcoin here right now, we could actually see that this was, for those that are in the private bear den, this looked like a very noticeable strong right head and right and shoulders. So the breakdown, at least to the EMA line here, we knew was coming around 10,800. Now the breakdown below 10,400 was another very important part. So if we can't close above this area right now, or we start, especially on the hourly chart, we're going to see a significant candle wick downwards. Now I think we could go probably as low as 4K depending on the breakdown here. So one of the things I wanted to do was bring up something that I thought was important, was the 21 moving average. So if we go in here, we want to add an indicator. We're going to add a moving average indicator just by doing it like that, typing it in, and now it's on the screen. We're going to go out to the top left hand corner. We're going to click on the settings button for the MA. We're going to type in 21, so now it's a 21 moving average style. We are also then going to click on the style and the color, and we're going to increase that bar width so it jumps out of the page very super noticeably. Okay, we are now about to look at the logarithmic chart on Bitcoin, so I can highlight an example that I thought was very interesting to pay attention to. Was just that steady market growth to some degree is a very nice, healthy thing to see, and it's often accompanied by a retest of the 21 moving average over and over and over again, right? So the reason why I'm the conjecture right now for $6,000 Bitcoin is that the 21 moving average is actually down here at around $6,400. So there's a lot of reason why I think that we could come back down to test this. It's the bottom of the bear claw as well. So you see again these multiple inlying factors. Now we have the 200 simple moving average down here at $4,000 too, which would lead the conjecture for $4,000. Now the argument for this was basically made off the idea that B waves don't look like healthy bull market waves, that B waves generally look unhealthy, and that if you compare the previous healthy market cycle of retail investment between 2016 and 2017 or 17 and 18 between the tops, we have a consistent and continual retest of the 21 moving average. Now I definitely know that there's an interesting conjecture point here, and I'm going to argue against myself for everyone. to know that we're trying to look at this from multiple angles. Here you have more data on the background on the logarithmic chart for Bitcoin in the past. And there is actually a time in the past, not too long after this, the initial Genesis days, where we do see a breakout and no retest of the 21 moving average until we break down below that previous high of around $1,000. So this is important to note, that if we are looking at the history of Bitcoin itself, that there was some very highly emotionally speculative days back in 2013. And I remember being a part of them because I also bought Bitcoin at that time around $800 and, $1,200 Canadian at that time. So like $900 American. So the point of this is what I'm interested to see is this a corrective B wave? Because if it's a corrective B wave, then we're coming down lower. If not, it could be a test of the 21 moving average, which would be 6,000. That would be a nice, healthy thing to see, because even here we do see it. And with as many traders as we have and investors in the market today, what happened in 2013 is very unlikely to happen again, because we have so many more sophisticated players in this game watching market sentiments. So I don't think that we would not see a retest of the 21 moving average. It's not to say that it's impossible or that it wouldn't happen, just to say I'm not weighted onto that. So I think that around 6,000 is an important area. Before we get there, it's got to be the $9,300, $9,002 break that's important to pay attention to. So either way, we have multiple aligning factors right now that say this could have been very likely a big B wave, and then we're going to see a correction wave down to around 6,000, and from there we don't know. We could go as low as 3,000 or maybe even $1,500 still. That's still on the table, right? Because in a game of probabilities, you have to look at all the probabilities. You don't play a game of Russian roulette and think to yourself, oh, I'm just going to ignore the last chamber. It makes the thinking about the game so much more. You're just talking FUD. Look, there's no bullet in the chamber. You are playing Russian roulette in the investment world at all times. Bitcoin is a fantastic bet. It has an asymmetrical quality to it, potentially, which means that wherever it's at today, it could be 10 times higher in the next 3 to 5 years. So it's important to keep that in mind when thinking about how emotional you're going to be with your investments. So when I say things like Bitcoin could still go to $1,500, it's not just run and sell everything. You need to come up with a much more intelligent way of investing, and that's by coming up with tricks like this, which is repeatedly investing time, well, as best you see fit, obviously. I mean, you should never, like some people are just better at, well, whatever, depending on how big of a trader you are as compared with an investor. But even if you're an investor, the better understanding you have with market signals gives you those 1 or 2 opportunities that might show up once every 2 to 5 years, where you can exit the market and reaccumulate down near the bottoms. Even at $10,000 right now, if Bitcoin's going to 100,000, that's great. And just for another example, I will use the previous data of Bitcoin here to show again, the fundamentals. So I remember buying Bitcoin back down here in 2013 and then watching it go all the way to $200 and going, God damn, that was stupid. And then waiting. I waited. I knew I didn't want to buy more as it's going down. I wanted to wait. So I waited. And when it started to hit $400, I noticed. I flew back to Canada in mid-April, March, May. I bought a bunch when it was around $600 again with all the gold and silver that I had, aside from some keepsakes. And then as soon as it broke out past $9,000, which was the previous all-time high, I knew we were going to at least $3,000. I was super excited because I had learned how to chart from the previous time buying the high and being the schmuck that was the schmuck, right? I learned my lesson. Okay, well, how do I play this game more intelligently? We took most of the profits that we had into the business, and sadly that didn't go as well as I had planned, but nonetheless, that's the whole point of playing the game, is you need to learn that. Anyways, the point of this is, this was a really beautiful learning lesson for me, because let's use today for an example then, right? Let's say something similar happens to Bitcoin. Even past the $21,000 range, if you were to take a very similar extension, and I can't do this in log right now, so I'm not going to. I have to come back and use regular linear charts to show this with the Fibonacci extension. But anyways, so let's say on the same previous boat, we saw an extension almost to the 0.4618. I think that's what that is, or it may be even higher. We'll find out. Oh, look how much higher it is in the previous all-time high. We're talking multiple times higher, right? So even if Bitcoin were to do something similar, once it breaks out past $20,000, let's say you're not even, no one's even buying it till 30,000 maybe, right? Let's just pretend for a second here so I can finish my long-winded rants. Thank you all for joining us. This is a great time to say I really appreciate you guys for coming and sharing in the community and the growth of this content. I think it's really important that we have as many eyes and people communicating together, and hearts learning to work together. I know it's not always the easiest thing. There's bumps and befuddlement and confusion, but we just keep showing up and doing our best to overcome those obstacles because it's inevitable. So let's say it broke out past $20,000. So the last time Bitcoin broke out of 1,000, it went to 20,000, right? So that was 20 times higher than it was currently at that time than its previous all-time high. So we'll use the Fibonacci extension retracement tool just to make a rough guess assessment of some of the potentials here. Again, in my mind, remembering that I think hyperinflation could bring us to monumental levels into the hundreds of millions of dollars, potentially because fiat paper is essentially worthless. Even the first extension of the 4236 area is 60 grand. It's easy to say that it could go to 60,000. Now, for any investor, an institutional investor that's been in the markets for a long time, knows that a breakout and a confirmation past the all-time high that might still have another 300% to go is going to love that, right? So even at $30,000, where we have a clear definition of a breakout in Bitcoin, it might still have at that point another 60% on a breakout to go. Now, if Bitcoin were to do that 20 times again, so 20,000 times 20, right? That's almost $400,000. That if you were to do the same, let's say it even did half, that's upwards to 200,000. Even if it were to go to 5 times from where it is at the original breakout, which is 4 times less than it did in 2017, that would put us at $100,000. Bitcoin could easily go screaming to $100,000 in the next little while, right? So all we're doing is trying to do risk assessment based off multivariate timeframes when we're doing analysis like this. So even though when we get into the minutia of Bitcoin at the moment and we try to take away some of the fundamental perspectives because we're interested in the more immediate signal, which is, okay, what's the market direction over the next little while, not over the next year, 2, 3 years, etc. So I want to always consistently show this because as long as everyone understands my long-term fundamental beliefs in this space, then it makes it a lot easier to understand because there's there's a lot of conjecture that goes into that particular sentiment, so I won't stray too far down that path. I'll stay very relevant for where we are. So the point of why I like doing this and why I enjoy doing this is because I think it's important to stay relevant to my own education in the way a brand new market is informing itself. For the first time ever, we see a huge new growth of an ecosystem similar to the stock market and to new financial systems that we've never seen before. Keeping your tools sharpened in this range is only going to be valuable. Right? This is why we started the private Arcane Bear Den, is because we know that a group of people that are able to work together to increase the level of thesis understanding we have in this space is extremely valuable, because there are any trader that's coming from the traditional markets is going to make so many mistakes here because this is not the traditional market. So the way chart patterns used to work in the stock market will not necessarily work here. And this is what we're learning, and we're all learning it together at a very heightened pace because it's 24 hours a day, 7 days a week, and that is pretty noticeably different than what we had before. So this alone, I think, is one of the important parts to keep an eye on. So anyway, I did this yesterday for all of you that had asked. We're going to run it through as a Happy Canada Day and Happy Independence Day for the United States, although neither of these countries are completely like free and independent like they used to be. Not that that's always a great thing either. There's a lot of downsides to everything we do as a species. But for that, we're going to run a 30% discount on the private Bear membership. Again, it's only for brave people that it's mostly thesis reading content. It's not signals. I don't tell anyone when to buy or when to sell. I hate that kind of crap. I think it's valuable to be educated in this space so that if you do hold an investment and we go up and we hit 100 grand or we hit $1 million and we come back after and we retrace to 300,000 or back to 20,000, that you were able to do your own thesis of when you should be entering and exiting a market and how you should disperse your own funds so that you can make sure your wealth and your life is increasing at the way you deem fit. That's what this is for. So if you type in Bear Den 33 for some type of I guess, celebration of Canada Day and July 4th, there's a 30% discount on the private Bear Den membership. So if you go to arcanebear.com/club, you can sign up via that angle there as well. Thank you for all the new people that signed up this week. I really appreciate that. The newsletter just went out this morning, so keep your guys on your inbox for those of you that are already private Bear Den members. I love communicating and writing these theses because it feels like a very stoic moment, and I appreciate that very, very deeply. So thank you guys for the opportunity to allow me to create that content for you guys on a frequent basis. It's been a very important endeavor for me. I love the writing has actually made me start reading more. I've been reading more books to make sure the theses that I'm bringing you guys are backed up by other people's basically criticisms of the work and the space that we're in. Anyways, super excited. So Bitcoin right now is in a pretty precarious spot, although it has broken above the $10,400 range, which is right around, again, the 618. So again, we're right in the middle of the potential breakdown. 9,000, 7,000, 6,000, 3,000, and 1,500 are all still on the table in the intermediate space because we don't know whether that was a B wave or not. And if that was a B wave, it could still hit any of those targets on the way down. And because there's a lot of big boy players in here and we don't know what's happening in markets like this because they're still evolving, we will not know. So making a prediction would be ignorant. All we can do is put probabilities on the table. And as each stair step area takes place, we know then the variable degrees of what's going to happen in the next few months. But with that in mind, I want to end it off by saying, again, remember, I believe this crazy thinks Bitcoin is going to millions of dollars. So regardless of the fact that I like to trade and I'm excited by the charts and learning this new space, keep in mind what my fundamental analysis of this space has been, and then it makes understanding my differentiation and the risk assessments of each of these areas probably a heck of a lot more exciting. Anyways, I'm going to answer some of your guys' questions and take some look at the charts. I know I said I'd go over Litecoin and Ethereum at the beginning of this video as well, so I will do that very quickly at this particular moment. Again, for everyone that's new to the Bear family, I only and will only chart Litecoin versus Bitcoin. I do not care what it's at in US dollar price. I think if you're looking at it in US dollar price, you will lose in the long term. So here we go. These are previous entry targets that we had. They actually held true for quite some time. It was nice to see. Exit points were all around the same top area that we had before. You could have even boundaried out. I know a lot of people in the Bear Den exited Litecoin around 17,000. We heavily suggest anyone thinking that trades like this are valuable in the long term, just look at the long-term previous history data. They're not. Although Litecoin does offer a very beautiful speculative leverage play with Bitcoin, and I think it's important to understand that I do believe Litecoin has some fundamental underlying ideas that make it valuable and that we should keep it around because it's important to have competition. In fact, I encourage more of it. It's always good, but in the competitive nature where we actually are all aiming to see the development of this infrastructure for the freedom of the individual and the people at large on this planet, not just the few. So to be very cautious because this is a philosophical debate more than it is a technical one, although the philosophy does have some technicalities to it. So with Litecoin here, we'll go in a little closer. We had our entry bars everywhere between 8,000 and 9,000. Again, I did not take a position in Litecoin because I was at that particular time playing in Seller and Matic. For everyone that had, who's in the private Bear Den, you know this. Although from the bottom, the double bottom here on Litecoin with Bitcoin's price, we did see a 20% spike upwards. Again, this is why I think these short-term trades with Litecoin against Bitcoin as speculative assets is an extremely valuable and fundamental play to be aware of. Ethereum, the same thing, although I see Ethereum as significantly less valuable as Litecoin only in conceptual terminology. Whether or not at enterprise scale that's true or not is very, very difficult to tell. We do not know what type of application some of these dApps can provide at scale, and that is a whole nother topic for a different month thesis. I'm assuming EOS would fit into that band and category as well. So again, it's just about having a really well-rounded understanding of what all these different spaces mean in this particular sector as well. So here we're taking a look at Ethereum versus Bitcoin. So Ethereum's price right now is currently equivalent to what its price was back in 2016 at Bitcoin's price. right? I don't care what the US dollar price is in this particular space. I think it's useless to chart the US dollar. I think anyone that's going to chart the US dollar against these tokens is fundamentally going to fail because they haven't recognized that this ecosystem is more valuable by itself than the US dollar system. This is likely the growth of an entire new stock market and the way we do business at scale, and we're seeing the birth of an entirely new ecosystem. So to chart it in the old legacy system doesn't make any sense in my mind, because you will inevitably always fail. If you're looking at the US dollar price and we're constantly having a degradation in the US dollar, you won't know what the actual price is. So I only and will only always chart in Bitcoin unless I'm charting Bitcoin to US dollar price, because I can't chart Bitcoin to Bitcoin, which is, again, ladies and gentlemen, 1-to-1. It's an important part to keep in mind and meditate on. So, Ethereum has actually showed this is a very, very strong area of support, and this is actually a fairly nice type of consolidation to see. This is probably not a bad entry area for Ethereum, although because none of this is investment advice, and I do not wish to pick up Ethereum. I think there are better speculative plays that I can put my thesis and research into. It comes not from here, although there's definitely the possibility for a bump to the top of the cloud here, which would show a nice 45% increase in Ethereum against Bitcoin, or potentially the 25% top up to the previous areas of resistance that it has right here at the bottom of the previous spike down, and the mid-range to top there as well. So that's both Ethereum and Litecoin. Again, hugely speculative bets, especially in the Ethereum play, because it's a much more enterprise-like development. It's really relying heavily upon the dApps and the use case that is built on top of it. And because a lot of this information is open source technology, you could see a bunch of other competitors that come to market way sooner with a much better template. And as long as they have a way to onboard customers and businesses, they will be successful. So I would not speculate too much on tokens that are running this idea, but it's still a great thing to do is pay attention to the way we dissect these markets and the different companies and tokens and their use cases in this particular space. I am not a Bitcoin maximalist. I believe you need other blockchain-like technologies for keeping public records and information, like a Library of Alexandria that Flow produced. I think that's brilliant. It shows extreme intelligence and genius to realize the intellectual capital of mankind needs the same type of security and development production put into it as money. This blockchain sector, this cryptographic, or more importantly, the conceptual ideas underlining the technology that takes in the philosophy of just the idea of distribution or decentralization or empowering the bottom population of the planet, is not about technology. It's about the way we build and grow together. So I think that that's a great way to just dissect this thesis. I will dedicate the next 5 to 10 minutes of the show, now that I've gone through all of the tokens, to answer some of your guys' questions. I will give 3 or 4 of those thoughts as I scroll through here, depending on what the group is asking, and I will go from there. Nice. A lot of people are, I'll just resonate this idea. Look, a lot of people shouldn't be traders if they can buy and invest and know, knowing when to get out is always a good thing too. So is knowing when to get in. So even though you might just want to be a hodler, if you don't know how to take advantage of the wealth that you have, you will never truly be successful, because you'll be relying entirely on luck. And luck will not win you in the long run. So I suggest everyone that has investments knows what is being spoken about when the markets commentators come on, because if you don't understand what we're saying, all you hear is noise, and you will not be able to make any rational decision, and you will fail at some point or another. Let's take a look. Have you thought about Chainlink? In the private Bear Den group, there's been a lot of chat around Chainlink. Again, I'm only one individual, so that's why I always highlight the strength of the group and the community of the Bear Den. I also make the sentiment that I'm probably the whatever. I'm like, it doesn't matter. The point of this is there are other people that are looking at it and talking about it and in our group together. And I let those people share their information, because a big part of the education process is sharing what you've just learned with someone else, right? So now if I'm my first time charting and I'm trying to figure out how to use the Fibonacci sequence, I go through and I do it, and then I say, what do you guys think? Am I doing this correctly, right? And then you start to get other people's criticisms, and you just keep doing that until you find something for you that works, because a lot of the times you can be successful from randomness, more so than you would expect. So you can make a bunch of money from a shitty trade, and you can lose a bunch of money from a good trade, because it's not about how much money you make, it's about the strategy and the implementation of a business model almost entirely. So yes, we have been looking at Chainlink, but me specifically, no. If you want me to look at it, we could do that. So we will look at Chainlink as well. I did see that it had gone through some previous spikes recently, so I would definitely say I'm not super interested into it. I would like to find tokens that have already retraced, although yes, these were a beautiful build up into May and April here. This previous breakout, I'm surprised. Again, this is why I'm so stoked there's so many people in the bear family. It's a nice 100% run, but again, just to compare it with, for instance, Seller, which is one of the private bear den thesis ideas we were looking at, just in the last 2 weeks, or last 24 hours, 72 hours now, I guess we're into this market, and we see the formation of a potential bull flag again. That was a 60% gain. So it's all about, look, I can only focus at one thing at a time. So with Chainlink, let's go back. We'll look at Chainlink. Boom. We'll go into the minutia of it. Okay, we're turning down on Chainlink here. Doesn't look super strong. We're still heavily below the 21 MA. We're coming down to the bottom of the bear claw. Let's see where we are in the EMA, your potential wave structure. Okay, so it's very interesting. Okay, this is a great example to go over the Elliott tool again really quickly. For those of you that don't know what Elliott wave theory is, it's basically a form of fractal mathematics. Quite simple, easy to use, very similar to the Fibonacci sequence in terms of its fractalization characteristics. Let's take the 1, 2, 3, 4, 5 count and count out some of these smaller waves. So we, for what I mean by fractals, that you actually have Elliott wave theories in Elliott waves, right? So we could have seen that this was maybe a 1, a 2, a 3, a 4, and then a 5, right? That was our first Elliott wave structure. Now the next one actually looks like it may have taken place here, which is we have a 1 now, a 2, a 3, a kind of meandering 4, again still right at the almost right at the top and bottom of 1 is fairly similar, and then a 3, and then a big 5. So I would be pretty worried about Chainlink at this particular moment. If I hadn't taken profits yet, I'd be doing so now, because at the fact that this might be at the top of a wave characteristic means it's probably coming all the way back down to 2,000 or 20,000 satoshis. That's my thoughts on Chainlink. Not financial advice, ladies and gentlemen. Do your own goddamn research. Just my thoughts though. So let's take two more questions. 90% of crypto bill on top of let's see. You're curious about the moving averages I have at the bottom. So for Bitcoin, okay, I'll show you guys what our setup is on the charting screen. So we have a few indicators that I really like to use. Again, you can get them by going and following us at Arcane Bear on TradingView here, and you can click on our scripts. And from there, we've got the Eagle's Nest and the Bear Claw, as well as Eagle's Crossing, and we're producing on another one. I'm not sure what it'll be called, maybe River's Edge or something. We'll find out soon enough with that one, but it's basically an ADX cross. I've been playing around with it in the background. Anyways, the point of this is Bitcoin right now we have the 200 and the 314 simple moving averages are a part of the bear claw itself. So if you open up the content indicator here on the right hand side, you can see that the bear claw right here has all these moving averages, and then it has a simple moving average of 200 and 314. And then when you go out on the weekly, you can see the 21 moving average, which I added in there, which is this strong orange line here again. So that's all the questions we're gonna have time for today. Thank you all for joining us. Again, if you're new to the Bear family, smash that subscribe button. If you like this content, hit the like button while you're at it too. I mean, you guys already know all this stuff, right? Share the videos if you like it. You're going to do that whether I ask you to or not. Although I will tell you, the more we share the videos, that's what YouTube's looking out for now. So if you post a YouTube video on Facebook, they love that because they don't like Facebook. It's this crazy thing. So if you guys can share the content everywhere. Again, the other thing is thank you to all the Bear family members that help support the private bear den. And again, do remember we have a 30% discount for anyone that wants to become a member for the next 4 days. Just type in Bear Den 33, all one word. You can get a discount whether you're buying a year or the recurring monthly package. Thank you guys for all your support. We will see you on the other side. I'm going to leave you out with our cool intro. Trade safe, use a stop loss, and this is not financial advice. I repeat, this is not financial